again and welcome. This is Robert Schein, Managing Director and Partner at Blanke, Schein Wealth Management. Well, thank you again for joining us on this Tuesday, the 18th of January of 2022 in our market insights and observations. Today, markets are moving again. We have NASDAQ continuing on a corrective sell-off, and it's continuing from Friday. We had a 3-day close. And so markets are just continuing their sell-off, partly because of the 10-year Treasury or interest rates. You know, mortgage rates moved last week higher, interest rates moved higher in anticipation of what the Federal Reserve will do later this year. Now, that later is now becoming closer and closer, meaning as close as March, for the probability of an interest rate increase. That's what markets are really trying to digest right now. The higher the interest rate increase, the more margin pressures on earnings. Now, we can see that clearly by banks. The banks missed from JP Morgan and a few others right now. And that's, if you look at the readout or look into one of the reasons why they missed their earnings expectations, even though their top line revenue was growing, their net was lower because of wages. Wages were increasing, and that's sort of concerning because if that translates into other corporations, and so far as we have fourth quarter reporting right now for corporations, over 60% of those earnings reporting are citing wages. So as to reasons why they have to be concerned. So that's problematic. That's why the 10-year Treasury is already ahead of the Federal Reserve, and that's another concern why markets are selling off in the short term, simply because is the Federal Reserve behind the curve? Well, if we look into earnings and we listen to the corporations, you know, some of the inflationary pressures, the inputs are managed and manageable because of the supply constraints because of COVID and the variants and so on and so forth, and sort of these rolling sort of curves that you have to go through as you navigate your business from your employees to your supply chains. And all of that really lends itself to and leads to higher inflationary prices. So that is the non-sticky element, though, the non-sticky sort of the flash in the pan that originally the Federal Reserve wasn't too concerned about. Now, what is sticky is the wages. And that's the concern we're going to continue to be watching as we see the fourth quarter corporations continue to report, because earnings on the top side, corporations are making a lot of money. The question is the net, the compression, the take home. So we will continue to watch this, as will the Federal Reserve, and that puts the Fed back in play as interest rates are rising. Now, a bigger picture as we take a long-term growth view, as markets, you know, sort of have the volatility and digest the news from day to days. We also take advantage of markets like today, like this last week, to put on our long-term perspective, as we do for our clients at Blanke, Schein Wealth Management, and say, hey, listen, you know, retirement's long, right? Or if you're saving for retirement, these are wonderful days where opportunities are, 10% from the high on the NASDAQ, when NASDAQ's been running well over 25, 30% per year the last few years. It's okay for NASDAQ to take a break and then say, hey, wait a minute, what are the companies that I want to take a sort of an opportunity to add to my portfolio, or even add more to my portfolio? So these are the days and the environments and the periods of time where you have to take a longer view and look at the growth set. Well, corporations like we woke up today and Microsoft is buying Activision. And so that basically is a play. Microsoft's entering the world of the Metaverse. Now, if you don't know what the Metaverse is, it's the world of AI, where you put in these glasses on and you're in another virtual world, and you're really competing, whether it's gaming, whether it's all this next level technology. The reality is that it's another dimension using technology, and it's a real thing, because we're talking billions. If you look at the Metaverse last year, or just the gaming world as it relates to all of the gaming and the gaming opportunity last year, it was a $173 billion industry, and that's projected over the next 5 or 6 years to be double that, over $314 billion. What we do know about technology and estimates is they're always lower. So there's a short-term play, Microsoft's getting into the Metaverse, and a long-term perspective, if we look at the growth opportunities here and say, hey, let's put our long-term hat on and say, what opportunities present themselves, even when the markets are downside in the last few trading sessions, if you will. That's where it really becomes interesting for us, and we really take advantage of this for our clients. So that's a 1, 2, 3 of what we're paying attention to, what markets are paying attention to, and what's moving markets on the short term, this shortened trading week. So thank you for joining us again. We'll see you again later this week. Have a good day. Bye-bye.